Welcome to Illuminati Silver. We tell the truth about silver. Today is Tuesday, the 21st of December 2021. And earlier, we produced our Gold and Silver Tuesday update, where equities show recovery and silver also show some gains. Now on Sunday, we produced a video entitled Gold and Silver Price Forecast to End 2021, where we predict gold and silver prices will end this year and provide a number of considerations which may very well affect those prices. In all honesty, we were disappointed by the number of views that video received, and so we've reproduced it again in this video under a different title and thumbnail. And so if you've listened to Sundays, then please feel free to ignore this one now. If you haven't, then we hope you enjoy it. In our updates, we pointed out that gold finished last week up $15 at $1,798, even though it had briefly touched $1,814. We also pointed out that silver ended the week up 18 cents to close at $22.38, having been as high as $22.70. Now, both of these figures are far cries from the predictions many of us made about gold and silver prices at the start of the year. Now, we were some of the most bearish in predicting that gold would close around $2,000 to $2,300 and silver would close in the early $30 range. Most, if not all, of the pumpers were predicting a minimum of $3,000 gold and up to $10,000, and silver almost guaranteed to surpass $50 and possibly ending the year above $100. One or two even going into many hundreds of dollars above this level. One of our best watched videos was why silver will not reach $50 this year. Well, we have 2 weeks left before the end of 2021. And short of something rather cataclysmic happening between now and then, it is difficult to see gold and silver prices move very far from their current levels, really in either direction. So perhaps it's worth looking at what may happen which could influence prices during these next 2 weeks. We shall make a list, but not necessarily in order of importance, and some of these factors will affect the others, though ultimately the US dollar value, or relative value, is most likely to determine prices short term. So number one, we will put the main determinant, which is the value of the US dollar. Of course, a whole range of factors affect the value of the US dollar, which range from speculation to geopolitical news to economic reporting and central bank decision making. Well, we saw 3 major central banks report last week. The most hawkish was the Bank of England, which raised rates by 0.15% to a 0.25% base rate, with a promise of more to come in 2022 to help eradicate inflation. Though we suspect it might halt the increase in inflation, we're not sure whether it will eradicate it. The second was the FOMC of the Fed, which promised potentially 3 rate rises in 2022, and the same in 2023 and 2 in 2024. But for now did not raise rates, but settled on doubling its bond buying tapering program, so that the original $120 billion a month purchases will reduce to zero by March 2022. The most dovish in our view was the European Central Bank, which had undertaken to reduce one strand of its QE program while allowing an additional strand to either stay in place or could potentially increase. Needless to say, it did not raise interest rates. As far as the dollar index is concerned, which is a basket of currencies against which the dollar is assessed, the euro has the greater weighting than the remaining 5 currencies, or the additional 5 currencies, and sterling has the 3rd largest weighting, with only the Japanese yen having a higher weighting, coming in at 2nd place. So as far as interest rate changes are concerned, we're not going to see any real impact between now and the end of the year on the US dollar because they've already been announced. There may be some after effects, but frankly no new news will come out. Number 2, COVID-19 and Omicron. Without doubt, the greatest impact on global economies in 2021 has been COVID-19 and government lockdowns in reaction to this global pandemic. Just as we thought we were recovering from the pandemic, a new variant has raised its head in the name of Omicron, which, we are told, has far greater transmissibility than the original COVID-19 and Delta variant, though the jury is out as to its total impact, but does seem to be favouring that this virus is less harmful. Nevertheless, a number of governments, including the UK, have already begun a range of either lockdowns or stay-at-home measures or keeping distance measures, all of which will affect the global economy and will not only affect the US dollar value, but other currencies too. Perhaps more concerning for the price of silver will be the potential reduction in the industrial demand for it, which until now has represented in most years anything ranging from 50 to 60% of its physical demand. 3. Geopolitics. There are major issues developing globally from a political perspective. Apart from various government heads finding their positions questioned, aka Boris Johnson and Joe Biden, perhaps more immediate are issues vis-à-vis the relationship with China and its human rights records, its intentions towards Taiwan, and its treatment of Hong Kong. We also have issues around Russia and Ukraine, and we cannot ignore North Korea or Iran. In addition, we have a fuel or energy crisis, which could potentially worsen. 4. Cryptocurrencies. Although in recent weeks, the cryptocurrency market has waned from its all-time highs, rapidly approaching a market capitalization of $3 trillion at one point, it's still nevertheless standing at $2.2 trillion. This is 2+ trillion that could have gone into other asset classes had cryptos not existed. We stated very early on that gold and silver and other precious metals would be affected by the rise of cryptocurrencies. And we're told we were wrong. We didn't know what we were talking about initially. Though since then a number of talking heads have come around to our conclusion. And it is rather galling for those in the precious metal space to hear them regard Bitcoin as digital gold and Ethereum as digital silver, and that the precious metals market is dying as cryptos replace it as both an inflation hedge and speculative asset class that has outperformed precious metals since cryptos have been in existence. Now, whilst we see room for both, we do not question the threat that cryptos have to the precious metals marketplace in deviating funds not only from individuals, but also family offices and now larger institutions, moving monies which would have normally been allocated potentially to precious metals and some equities, and moving them into cryptocurrencies. We haven't even touched upon central banks and governments already declaring announcements that they too are working on their own digital currencies for the future. 5. Equities. Gold and silver have benefited in the past where there have been doubts over equity markets, as precious metals have been seen as a safe haven. With most pundits predicting a fall in equities in the not too distant future, this could provide some uplift for precious metals, especially as history has shown us that when equities dip, so too do cryptocurrencies. That said, we cannot ignore the fact that equities have vastly outperformed gold and silver since what was regarded as their all-time highs in 2011, though gold has surpassed this briefly in 2020, but has since fallen back. We doubt, though, there is going to be an equity collapse between now and the end of the year, but who knows? 6. Gold and silver future and options calendar. With gold and silver options settlement falling due on the 28th of December and futures settlement on the 29th, and potentially new futures and options then being taken out, we shall see around these dates a potential impact on prices in either direction, depending upon the number of positions which have to be closed and the positive or negative direction new contracts are taken out in aid of. Now, there are, of course, many other influences on gold and silver prices, and we know many are now shouting at the screen, manipulation! Well, we have to say that the manipulation argument of governments deliberately holding down prices this year, as they cannot afford for gold and silver to rise, is rapidly losing credibility and credence. Yes, traders will manipulate the paper markets for sure to make a quick buck. We've always admitted and highlighted that. There have been many lawsuits proving this to be the case. And yes, historically, the plunge protection team, or its precious metal equivalents across the world, may also intervene when markets become unruly. But if anyone seriously thinks that central banks spend their time preventing silver from reaching $30 or even $40 or even $50, or gold from reaching $2,000 or $3,000, in our view, seriously need some form of treatment. Now, they may have something to say if silver were to jump to 1,000, or suggest that it might, simply because of its impact on inflation due to productivity cost rises. Or if gold were to jump to 30,000, yes, we can see central banks being concerned, especially if they're not holding as much gold as they wished. But frankly, central banks have more to concern themselves than with a 10 to 30% increase in the price of precious metals. We know from discussions that we've had with central banks that really this subject hardly ever comes up. So, short of a black swan or geopolitical storm raising its head between now and the end of the year, we feel very safe in predicting that gold will end 2021 close to the current level, at or around $1,800, but will not, in our view, be lower than $1,700, nor higher than $1,900. And silver will close around 22-ish, but no less than 20, and no higher than 24. Now, early in the new year, we will give our 2022 predictions. But at the end of this year, we see very little that can affect prices from current levels. What do you think? Do share your thoughts. Thank you so much for listening. If you haven't already done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. And thank you once again for listening. Have a great day. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.